Welcome to Chart of the Day. I'm Robert Folsom. Today versus the 2000 dot-com boom. See the chart for yourself. Here's a chart you may not have seen before, yet it is simple and its meaning is clear. It shows the ratio of NASDAQ versus S&P 500 volume, or shares traded. A rising trend line means investors' preferences for NASDAQ shares is rising. The timeline is from 1990 through early March 2021. You can see that we've already scrolled the first decade of the trend line. In fact, this peak was March 6th of 2000. That was a 1.3 preference among investors for the tech-heavy NASDAQ over the S&P, which won't surprise you if you recall this period. Wall Street and the public were fervently bullish on technology. Articles like this one were frequent, with comments like, quote, "The enemies of the future all betray a tragic failure of faith, their blindness to opportunity, and their bias toward regulation and redistribution is chiefly a religious disorder," end quote. The thing is, fervently bullish extremes in the media and the market can signal the end of an era, in this case the end of the dot-com era. This also marked a peak that would stand for 2 decades in investors' preference for NASDAQ shares versus the S&P. Obviously, hindsight's 2020. We don't mean to diminish the advances in technology we've seen across these 3+ decades. It's been an amazing time. That said, you're not an enemy of the future if you point out that advances in technology don't necessarily translate into rising stock indexes, particularly not for the NASDAQ. Now, I said that this March 2000 peak stood for 2 decades. Here's where this NASDAQ S&P volume ratio stood as 2020 began. What followed was not simply a break above the 2000 peak. As of February 18th, 2021, the ratio had jumped to 2.45, 89% above a peak that had stood for 2 decades. Once again, the stock indexes are at new highs, and the technology bullishness is fervent. No need to ask what dot-com boom. Stay tuned.